Kevin Hincks, co-host of Fast Market, live at the CBOE, is with me this morning. And of course, so we have a meeting that will be happening with the president and President Putin on Friday, right, of Russia, China in the headlines too. And of course, we have the big news of NVIDIA and AMD having to give some of the revenues that the money they make in China over to the U.S. So I want to hear a little more about these geopolitics. Good morning, Kevin.
Good morning, Nicole. Yeah, I mean, I think the meeting between President Trump and Putin, they have aspirational goals, which is get an unconditional ceasefire. But the problem is the territorial concessions that Ukraine is going to have to make are basically a non-starter. We're going to see what kind of salesman President Trump is, because he's going to have to negotiate some type of ceasefire that includes territorial concessions from Ukraine to Russia. Now, you also throw in the India part of that with the tariffs that we have on India for buying Russian oil. Is that part of this big negotiation? It probably is. Then you look at the other things we have going on this week with inflation data. You know, last week we were heavy on earnings and very light on economic data. Well, flip that. This week we're very heavy on economic data, very light on earnings. Only 7 names in the S&P 500, only 2 in the NASDAQ coming out with earnings this week. So it's a much lighter week in terms of earnings that are significant to the market, but there's still a lot of things going on. There's Fed speakers going to be talking about that pivot towards more rate cuts. There's new discussions now of James Bullard or Mark Summerlin going to be the Fed chair. Now there's 4 names there. So the economic data that you mentioned, CPI, PPI, and don't forget retail sales on Friday is going to be an important one. So there's a lot of economic data, a lot of geopolitical talk going on. But all things considered, you know, this market is very hesitant, only up less than 0.1% to start the day, Nicole.
Yeah, I think the inflation story is so huge, obviously, as more and more folks are waiting for the Fed to cut in September. You know, we've heard from so many of the Fed speakers, and you've had a couple more jump on board recently, also, you know, saying that they would vote for a cut. What's interesting is many fund managers are now having some concern about stagflation. Thoughts there?
Well, here's why. Because we know that the U.S., you know, the unemployment rate at 4.2% is still, by definition, full employment. But that's the risk, right? Because it almost hit 4.3 in the last non-farm payroll report. But here's the problem. CPI data, year over year, headline CPI expected to go from 2.7 to 2.8. Year over year core from 2.9 to 3%. Those numbers are starting to be a little stingy and not going down towards the goals. So if the unemployment rate were to start rising, as well as inflation, there's your stagflation scenario right there. So what does the Fed do? If you start lowering interest rates, the unemployment rate will probably stabilize and the overall economy will get better. Does that lead to higher prices? Well, by definition, there's a disinflationary pressure from the overall market. But tariffs have thrown a little wrench into that. If they're one time, if this is a short-term bump that will then recover, then you don't have to worry. And that's exactly what Michelle Bowman talked about when she went to 3 rate cuts this year, that she upped that over the weekend. So is inflation the scare, or should we work, if that's not just seasonal and staying high, do we focus on the unemployment rate? And unemployment rate, if you're worried about that, that means rate cuts, Nicole.
Actually, now that you talk about that, you sort of jostled something in my mind. Didn't one of the big banks actually expect like 4 rate cuts this year? Maybe it was. I mean,
they're all over. Some of the economists are all over the board, and they've all been changing, right? They went lower at the start of the year, and now they're all pivoting, including some of the Fed speakers, right? It started with Waller and Bowman. Now Bowman went to 3, so she's been kind of a trailblazer here, Michelle Bowman, in terms of being a dove, because she doesn't see inflation as a problem, even though, the last couple months it's firmed up here, but she thinks that's seasonal. She thinks there are some pressures from the tariffs, but it's one-off, and that'll come down. She doesn't see inflation as the risk. She sees the labor market as a risk, and that, if you agree with her, inflation not a risk, labor market is, that calls for more rate cuts.
Yeah, I mean, I still, 15% of the revenues that Nvidia and AMD make from sending chips to China will now be paid off to the government. It's a very interesting development. It's not something we're used to hearing. So that will certainly be a big discussion today. Citi has a 6,600 year-end target. They're not the first to have a 66 year-end target, 6,600. What do you think of that for the S&P?
Well, you touched on something that's very important. A lot of traders, a lot of people in finance right now are waking up this morning going, what in the world does this 15% sharing of revenue from China mean, right? Now, was there a risk to our national security by not selling chips to China? If that's the case, what changed? Right? Why is Nvidia and AMD sharing 15% of their revenue? Not their earnings, their revenue with the U.S. I think everyone is calling for more of an explanation of exactly what that means, because, frankly, something like this, Nicole, once you start this, it can run rampant through all industries that are selling abroad. Why is it just Nvidia and AMD and chips? Is there a national security risk? There's so many questions that this brings up, and I think a lot of people in our business are trying to find out what exactly. They need more explanation on what this means exactly.
Yeah, I mean, that's a really big deal. The 6,600 target, really interesting from Citigroup, and you have others at 6,600, and the Bitcoin trade is back. And there was, just last week, we were saying it was around 10,000 off of its highs. It felt like just when everybody loved Bitcoin, there it goes. Now it's down 10,000. Is it over? And people start to worry. And then look, right now it just bounces back. So you are seeing some interest there.
Gold being under pressure this morning, Nicole, just look at the U.S. dollar. The dollar being higher, that inverse relationship between the dollar and gold, or metals in general, that in most cases stays. So when I look at gold down this morning, I just look at the stronger U.S. dollar, and that's probably why there's downward pressure on gold. Bitcoin's a little harder to explain, other than the market is sitting at or near or around all-time highs. There's more and more legislation and acceptance and overall participation in Bitcoin, and that feeds demand for these coins. And I think that has got this this instrument on a historic run. But difference today between Bitcoin and gold being directly related inversely to the higher U.S. dollar.
All right, Kevin Hincks, it's great to see you. Great setup for this week. Looking forward. Thank you.